This week, Alla Valente and Heidi Shey from Forrester are with us to discuss cyber insurance. Then, Joseph Blankenship from Forrester joins us to talk about insider risk. Finally, in the enterprise security news, lots of executives shuffling around. Savient gets a new CEO and $205 million in funding. Forescout appoints its fourth CEO in as many years. Mudge finds a place at Rapid7. More focus on securing small businesses. More cybersecurity startups pairing technology with cyber insurance. Microsoft now has a $20 billion security business. Tyler explains what Herman Miller chairs have to do with spotting market trends. 20-year anniversary of SQL Slammer. Consumers don't want smart appliances. All that and more on this episode of Enterprise Security Weekly.
This is Security Weekly, for security professionals, by security professionals. Broadcasting live from G-Unit Studios in Rhode Island, it's the show where we talk security vendors and aren't afraid to name names. It's Enterprise Security Weekly.
Attackers are only getting more proficient, so how can you proactively adapt your cybersecurity strategy? Core Security by Fortra helps you uncover and prioritize the risks that pose the biggest threat to your organization. Core Impact is a penetration testing tool that safely finds and exploits vulnerabilities using the same techniques as attackers. You can conduct advanced pen tests with ease using certified exploits and automation. Take your engagements further by pairing with our red teaming tools from Cobalt Strike and Outflank. Learn more at www.securityweekly.com/core security. Welcome to Enterprise Security Weekly and happy Groundhog Day. This is episode 304, recorded on Thursday, February 2nd, 2023. I'm your host, Adrian Sanabria, and joining me is the master of marketing, the mayor of mayhem, the chief of chair analysis, Tyler Shields. How are you, Tyler?
Oh, I like that last one, chief of chair analysis. Yeah, that's a very important way to look at markets.
Also joining me is the czar of Zero Trust, the captain of content, the acolyte of artificial intelligence, Katie Teitler. How are you, Katie?
Happy 6 more weeks of Winter Day.
You know, today is also coinciding with Optimist Day. So Groundhog Day and Optimist Day are on the same day this year. Optimist Day is one of those like first Thursday in the month type of things, so it's not always on Groundhog Day. So I don't know if that's a conflict or a contradiction. You know, that you have Optimist
I mean, it depends on whether you like cold weather or not.
Yeah.
I happen to like winter, so I'm pretty happy about Phil and his prediction. So it's all good for me.
Yeah, I think that's a good point. But I found it funny. It was on the same day that we're outsourcing our optimism and pessimism to a small mammal. All right. Also joining us is the Baron of Bloodhound, the Pirate King of PowerShell, Sean Metcalf. How are you, Sean?
Doing pretty good. I was quite interested to see what Phil had to say because it's Groundhog Day. So I need to watch that movie. I guess I'm going to have to watch it tonight, as is tradition in my house.
I'm wondering if my kids have ever seen it. I'm not sure.
I was thinking the same thing, Adrian. I might have to introduce my 18-year-old son to Groundhog Day. And actually, my 15-year-old daughter might like it as well.
The worst part is I have a friend whose name is Phil, and every time I see him, I go, Phil? And he just loves that I do it every single time.
I bet he does.
Yeah, my kids are around the same age, Tyler, so yeah, I'm thinking they might enjoy that. And there's so many other movies based off it, right? Like it's like a what do they call it? A trope, right? It's like a movie trope, like it's Groundhog Day, but you know, in this sci-fi military context or something like that.
Yeah.
Like what is that? The Edge of Tomorrow?
Yeah.
Yep. That follows that same trope. You're right.
And then the horror movie series Happy Death Day, which kind of followed the same thing as well. The main character has to accomplish something in order to get out of that loop.
Ah, yeah. Very interesting.
I'm a movie guy, so yeah, that's what happens.
Awesome. Yeah, no, we're I think we're all movie people here. We've got Cocaine Bear coming up soon. We're gonna have to do a
You do realize the Forrester analysts are on this call going, Cocaine Bear? What?
Yeah, there's some. That's kind of a running gag, or it will be until the movie, at least. But I digress. Quick announcement here: join our Discord channel to chat with our hosts, ask questions, maybe share your favorite movies, customize live stream alerts, and more. Visit securityweekly.com/Discord to get an invite. All right. So today we're going to do a Q&A on cyber insurance. We're excited to have Alla Valente and Heidi Shey from Forrester Research with us today. We've talked a lot about cyber insurance on the program before, especially anytime something is confusing in the market or it's changing a lot or, new things are emerging, we like to cover that stuff, help people understand what's going on. And two great folks to have with us today. Alla covers GRC, TPRM, contract lifecycle management, and supply chain risk at Forrester. Welcome, Alla.
Thank you so much. I'm so happy to be here.
We're happy to have you here. And Heidi covers data security and privacy strategy, policies, and related technology controls. Welcome, Heidi.
Thank you. Excited to be here. And I think it's appropriate. Groundhog Day, cyber insurance.
Yeah. Yeah, maybe there's we can make a connection there. We can somehow connect the two.
Definitely. It's the same thing over and over again, right?
Mm-hmm. Well, you have to keep reapplying, right?
Exactly.
Every year.
Right. Is it the insurance companies that are trapped in the loop? Is that how it's? Because it seems like
we're all trapped in the loop, Adrian.
We're all trapped in the loop.
Nice. Yeah, and it just seems like we keep coming at the day differently. Trying different things. So that's before we get to that, let's maybe cover some foundational stuff. Like how long has cyber insurance been around now? Does anybody know? I actually don't. That was a shot in the dark. I wasn't sure if anybody knew the answer to that.
I think we looked this up, Alla, when we were looking into the topic. It depends on how you define when's it been around. It's been talked about for decades. Mm-hmm. If I look back into the last couple of years, I almost feel like maybe around 2017, 18 was when I was really starting to see a lot more questions and discussion from our clients and customers around the topic of people asking, do we get this? Is it worth it? That was what people were asking a couple of years ago. But before that, there wasn't much.
I think that's the important
It has existed before that.
Yeah, I think when it got interesting, people started to really need it and ask about it. And then the insurance companies started to try and better design it. I think all that's happened within the last 5 or 6 years, right?
Mm-hmm. But the term, or at least the concept, predates that.
Absolutely. Sure. I mean, the structure or the concept of cyber insurance has actually been around for quite some time, definitely over, 20 or 30 years. But what it's been used for and when it became a structured insurance vehicle and started gaining the type of adoption, that's been definitely much more recent. And, it's kind of like buying an umbrella, right? The most inopportune time to buy one is when it's raining. And goodness, it's definitely been raining quite a bit lately.
Yeah, definitely. Yeah, and it's been a hot topic for the last couple of years since ransomware has hit so many organizations, and we've heard stories about insurance providers pulling out of that market, deciding not to offer a cyber insurance product, and then the thing that's really interested me are the startups that are starting to combine these things. Like I had to learn the terms MGA and MGU, I think the two terms.
MGA for managing general agents, and then I've also heard the term insurtechs get tossed around.
Yeah, where all of a sudden you have cybersecurity products combined with insurance. So the products, they'd use the products, I guess, to figure out how to price the policy. And there's just so many things to talk about here. But yeah, let's just start with what are companies having to go through to get cyber insurance these days? Let's start there. Like how do you, like in the old days, I understand it's like anything else. Like you fill out a form, you fill out a questionnaire. But how's that going these days? How has that evolved?
Still very similar. You're still filling out some type of form to provide the insurers with information about your controls, your approaches to risk management, your security program. I think maybe back in the day, could have been paper. These days, you've got portals through your broker's website or something where you can input information as well. So there's different ways. I've also heard of companies where you have the CISO, for example, putting together a presentation that they now present to a room full of multiple insurers, talking about their security program, being able to do Q&A to clarify anything to that room, where then they can then come back to you at a later point with various quotes for what they're able to provide you in terms of coverage. But the ask in these questionnaires are getting more intense. So we've spoken to folks who tell us they spend like 4 or 5 months preparing for these cyber insurance renewals, because that's how long it takes for them to gather all the necessary information, fill out these forms.
Wow. That sounds more like getting a SOC 2 or something like that.
Hundreds of questions. Yes.
Yeah, and we've been hearing, when just following the emerging market, we hear about some of these folks using doing external scans, much like a bit site or a security scorecard would do, and partially using that to determine, I guess, a level of risk for the insurance provider.
Yeah, I mean, we've definitely seen that, where those types of tools are being used to help to price the insurance policy, but the external scan alone won't give insurers the complete picture, because they also want to understand what type of policies they have, what type of procedures, what's the maturity of their cyber risk management program. Do they have resources that are dedicated to this, or is it more just an afterthought? So it's both that external scanning, but it's also combined with a lot of the internal evaluation questions, which is why these questionnaires are becoming just so huge.
And another, I think frustration, or maybe not frustration, but difficulty that I hear CISOs talking about is getting the amount of coverage that they want. So first of all, figuring out how much coverage they need. But oftentimes I hear about them needing to go many different places because they're maxing out, I guess, the risk appetite of some of these insurance providers might be at like 5 million or 10 million, and maybe they need 20 or 30 million in coverage. So they have to go to, I guess, different providers to get that. So how does all that work? Like figuring out, first of all, how much do I need? And then going out and getting that when you can't necessarily get that from a single, one-stop shop.
That is not an easy thing to answer. Like defining appropriate coverage, it's going to vary a lot based on, because cyber insurance doesn't cover all of your costs, right, associated with some type of cyber event. It's only maybe some of the costs you're likely to insure. So it's sort of this thinking through of, what is your potential exposure? What's your risk tolerance? What's your comfort level for financial risk of how much you're willing as an organization to cover versus what you're probably expecting the insurance portion to cover? Some of this you can do maybe through like modeling potential remediation, recovery costs. So some CISOs will go to the point of trying to price out, X number of hours of incident response services, how much is that going to cost them? Or looking at cost of what's a breach attorney, hourly rates, legal defense, PR costs, that type of thing, to try to get some type of rough estimate for a particular scenario for what that could look like.
Yeah, and
I imagine...
And I would add to that organizations who are quantifying cyber risk. So if they have some sort of cyber risk quantification program and tool in place, what they can better understand is how much cyber risk they hold and what portion of that they might want to remediate. And whatever the leftover, whatever the residual is, would require some sort of cyber insurance coverage. But I would also say that another factor in determining how much you need is also based on your customers and your third parties. So we're seeing more and more that cyber insurance is becoming a requirement of RFPs just to do business. It's becoming almost like a commercial term. And depending on what level of coverage those RFPs might require, those numbers would start to add up and then also expand your need for cyber insurance.
Right. Yeah, and I understand you got to be careful. Careful to read all the details, because if you do want to use insurance for incident response, for example, like maybe you have to use the company they choose. In many ways, you don't really get to call the shots anymore if you're wanting them to pay, right? Like you got to do it their way.
Potentially. It seems like it's becoming less of an issue because a lot of the big incident response services providers are already on these panels that the insurers have of providers that they've approved, they're pre-vetted. So chances are, if you're working with one of the major ones, it's on this list somewhere. So the insurer is familiar with them. I've heard of other cases where the enterprise goes ahead and writes into their policy their preferred provider to make sure that, yes, if something happens, they can use the one that they want to use.
Yeah, Sean, I think you had a question.
Absolutely. So obviously there's no one size fits all. Heidi, you definitely hit that nail on the head, so to speak, as far as coverage goes. Have you seen an expansion? I mean, certainly with companies as they grow, certain companies grow through mergers and acquisitions and acquiring other companies. There is a risk involved with that. And there's due diligence, obviously, with acquiring another company to try to identify what sort of risk you're accepting by bringing them on. And there have been issues with breaches in the past where a major company acquires another company of mid-size or fairly large size. And then that company has a breach, which then has some impact on the acquiring company. Have you seen more of an expansion in this area around mergers and acquisitions sort of coverage as part of cyber insurance, or is this something that's still kind of evolving?
That's a great question. I don't think I've seen mentions of this. I would imagine that during a renewal, they would want to now consider this. And fold it in. But if this was something that happened partway through where the policy was in effect from the prior renewal, chances are it's not getting covered here. What do you think, Alla? Have you heard anything?
I mean, there's definitely been a lot of M&A activity happening, certainly. And when those mergers and acquisitions happen, I know some of the questions that I get pretty often is, okay, well, whose security program, whose security tools are we going to use? But if you're in the middle of a policy and you've already responded to the questionnaire with specific terms, you can't switch it midway, because then the insurer will say, well, you told us you had X, Y, and Z. Turns out you ended up with something different. Perhaps maybe this is no longer coverable. So I think that companies just need to be careful during those M&A activities to make sure that how they've responded to those questionnaires is still valid and in effect throughout that term or until they renew.
Okay, and a quick follow-up to that. Now that we're seeing attackers sort of pivot from this hardened environment, let's say that a company has really leveled up their environment. They've done assessments, security assessments. They've gone through and done their due diligence in identifying those risks and issues that they have. They've accepted some of them. They've resolved some others. Now that attackers are also pivoting to third-party vendors, those that may have access to manage it, sort of like a managed service provider or a cloud service provider. Are you seeing a shift as well around that, where those get captured as part of those initial analysis, that long questionnaire that was mentioned that has hundreds of questions, where they're asking about who are your vendors that have the ability to manage your system, and what is that relationship? Are you seeing that being involved and incorporated more into the policies, or do you think there's the industry is still shifting in that direction?
That's an interesting question. What I have seen is questions surrounding third-party risk management programs a bit more broadly. So the level of assessment, the types of technologies they've invested in, what that program looks like, less so around specific vendors or specific third parties. I don't know, Heidi, have you seen something different?
The only thing I can think of is the cases where it's like a special type of like insurance policy that's tied to a specific kind of provider. Like I'm thinking of programs where, Google had this thing like Cloud Protection Plus, where it's like if you're using Google Cloud, like GCP, and enabling their controls to protect the environment, and you're purchasing the insurance policy through whatever that special program is, then that's one way of getting additional coverage. But that's a little bit different, I think, than what we're looking at here in terms of the third parties and the risks that they pose specifically.
Yeah, so I have a follow-on question on that. So have you been seeing cyber insurance firms requiring certain technologies? So what I mean by that is a number of vendors out there have tried to use cyber insurance as a sell-through channel. For example, a company that does vulnerability management, for example, might sell through an insurer. So the insurer says, look, if you use Qualys, Tenable, insert Vol Management Company X, if you use this, we give you a discount. And then obviously that discount comes back as a kind of a sell-through channel. Are you seeing anything around that sort of kind of partnership between cyber insurance and vendors?
Oh gosh, it's a whole program. Like Marsh has the Cyber Catalyst program. That's pretty much this. Like they've got annual cohorts where security tech vendors can apply to be a part of it. They get evaluated. They make it onto the list, then they're considered a cyber catalyst. And if companies are using them, they could potentially qualify for a discount. So it is happening. And I've heard of cases where you even have your brokers making recommendations to policyholders of saying like, hey, if you were to do X, Y, and Z things to improve your program, consider these controls, then that potentially puts you in a better position when you're renewing or applying for your policy. The caveat here is that this advice is not always well received. You've got some organizations where maybe they do need that guidance and that help, and they're listening to their broker, and it's great. You've got others who feel like, why is the broker telling me this? This doesn't make sense. It feels like they're being too pushy, trying to sell these tools that may or may not even make sense for their program. So it can really go either way. And the guidance that we typically give our clients is that, you're not going shopping based on whatever is on this list. You want to be buying the tools, technologies that make sense for your program, your needs, your fit, your environment. And if it happens to get you a discount, great.
Yeah. And not only that, but you run into the potential ethical concerns here too. If I'm a cyber insurance vendor, broker, whatever they're called, and I say, hey, if you use, again, I'm just picking a random company, if you use Qualys, we'll give you a 10% discount. And then Qualys kicks me back, a certain amount annually on every deal that I funnel to them. The ethical dilemma of recommending a certain protection tool in an insurance capacity also could cause concern, right?
Potentially, yeah, depending on how it's all structured. Like right now, I don't think we're in that kind of sticky situation.
Yeah. One thing that is interesting is that a lot of these cyber tools and technologies are also being adopted by the insurance companies themselves, where they're using those tools in their underwriting process. So perhaps if they're using tools internally and then making those recommendations, it might also be because there's been adoption. They know how to use them, but they also know how to interpret them.
What are some of the gotchas for buyers? Because we know that insurance isn't a catch-all. We know it doesn't cover every situation. So what questions should businesses be asking when they're shopping around for insurance to make sure that they're getting the best coverage, they're most likely to be covered if an incident or an event happens? If a breach happens, obviously it's up to them to do their due diligence. But what are some of the top tips you have for people who are either looking for new or looking for, alternative coverage for insurance?
I think go ahead, Alla.
No, why don't you start?
I guess the thing that comes top of mind for me is, make sure that if you are trying to buy insurance to cover cyber, that you are actually buying a standalone cyber insurance policy. That's probably the key thing, because if you're trying to get coverage for cyber through other types of business insurance policies, whether that's through like a property policy or some other kind of liability policy, or it's not really covering what you think it's covering. And increasingly, these other policies are not covering cyber events. And that's where oftentimes when you see in the news these stories of lawsuits between a policyholder and their insurance company, you dig deeper and you realize that the policyholder very likely did not actually purchase cyber insurance, but they were trying to use an existing policy to cover some type of claim relating to cyber.
So they're getting confused and trying to get a bundle, really.
Mm-hmm. And I think the confusion could come from both sides as well, like the sellers, the brokers, as well as the buyers themselves, because there's these assumptions that are being made about the terms in these policies and how they're being defined.
Yeah, we've actually, in the news fairly recently, I think we saw a case in Ohio get decided in the favor of the client who had the policy. It was one of these cases where they didn't want to pay out if the attribution of the attack was like a state-sponsored attacker or something like that. One of these like trying to classify it under war, or some exception, where the insurance company didn't have to pay out, and I think they lost that.
Yeah, I mean, it's really small, nuanced language makes a really huge difference, especially with clauses around things like acts of war, how different policies will define war, whether that is physical only or digital. There's also this concept of silent cyber. So as Heidi was mentioning, other types of insurance policies that are not specific to cyber, but also if they don't have language that specifically excludes cyber attacks, then those are silent cyber loopholes. And it was back in 2021, State of New York Department of Finance created a framework that specifically said, hey, you insurance companies, you have to do these things, just to make sure that you're still solvent, you're not losing money. And one of them was go through all of the policies that you offer. And if it is not a cybersecurity policy specifically, then close that loophole, change that language, and make sure those exclusions are clear. And we saw that during COVID, where a lot of companies that were experiencing cyber attacks, they had other types of policies around business interruption and other types of general business or all risk policies. And they were filing to try and get reimbursed for those cyber attacks. But because these policies didn't say, nope, cyber definitely doesn't count, they were getting paid. And, look, the insurance market is not a nonprofit, right? They're there to make money. And so they need to make sure that they're tightening their contractual language and make sure that it's clear. But on the flip side, as organizations are looking for policies, they really, really need to very clearly read those terms to understand what it includes, but also what it doesn't include.
Yeah, that's something I've seen more often now as I look at some of these new cyber insurance policies and brokers pop up, is being extremely explicit to the point to where, like I'll browse past some of these cyber insurance websites just to get an idea on how attacks are trending and changing. Like one of the things I saw covered that I had no idea was going on was bricking. Instead of encrypting data to ransom something, apparently some of these ransomware groups are just destroying machines. Like making them to where they won't boot anymore, just bricking the firmware on systems. And because the insurance company says it covers it, I assume this must be going on, but I haven't seen any evidence of it in the news. So, like, I've been using some of these more open, and explicit cyber insurance providers just to figure out what's going on with threats. Just to see what trends are happening there. Over to you, Sean. I think you had another good question.
Thanks. So in the past year or so, there have been newer players, or at least I've seen some newer players, or at least some more novel approaches to cyber insurance in the space. These companies promote AI-driven or automated monitoring tool approaches to setting policy coverage and pricing. And since the really tough year 2020, when ransomware was just decimating companies, cyber insurance companies have been asking for more specific questions like what service accounts are members of highly privileged Active Directory groups? How many admins do you have? How is your environment configured? Do you have Exchange on premises? Things like that have been asked. So do you see the cyber insurance market shifting to more specific insured customer data-driven model around that? Or do you think this will result in potentially lower prices for companies that need cyber insurance, or even just better policies?
I think probably all of the above. Like there's certainly a trend moving towards getting more specific in terms of what controls are required. But as you've mentioned, there's also all these really interesting new players popping up where I see more of them in the services space, like security services, plus some type of cyber insurance policy being sold together, where the benefit is now you've got these experts, this firm that's offering maybe security assessments or some type of security monitoring service, who's hands-on within your environment. And so the policy that they're now selling, they've got greater assurance that the proper controls are there, or at least they're configured correctly. And if anything is happening, they're the ones that are responding to these alerts. So that is where I think I'm seeing more of the opportunity, at least in this market, is when you're combining some type of security service plus the cyber insurance policy. And we've seen this happen more in the SMB market, because that's where I think the demand is highest, where they do need that help.
So in terms of some of these tools that are coming in, Sean hit on a keyword for me, AI. And as companies are looking at tools and they're looking at what to implement, and the insurance firms are looking at the data they're getting, when it comes to machine learning and AI, what are some of the pitfalls that companies have to look out for? Because if the algorithms aren't tuned correctly, they could be getting bad advice, advice in quotes, bad data out of the tools, and that could potentially affect their security posture. So is there a danger there on both the business, i.e. consumer side, and the insurance side, if they're getting bad data out of those tools to evaluate whether or not to cover certain things or how much to cover?
I think this concept of bad recommendations or false positives have been an aspect of cybersecurity rating tools historically as well. I think the focus here, though, is on the continuous monitoring aspect, because companies change over time, their security posture changes over time, but also the types of attacks that they're exposed to is also changing. And what we've seen the insurers starting to do by leveraging these AI-driven real-time tools is to say, we're not only going to evaluate this particular company's security posture when we're underwriting, but we're also going to implement this notion of monitoring continuously. We've set up these specific thresholds of what's acceptable. Maybe it's based on the policy, maybe it's based on the company individually. And when their cyber posture falls outside of that, or if there are specific alerts that pop up that exceed that threshold, that's when the insurers are going back into saying, okay, we need to relook at this, or maybe follow up with the company themselves and ask what's going on. But I think that the AI is being used more from a continuous monitoring perspective.
Yeah, it's interesting.
Does that in any way infringe upon certain privacy or intellectual property types of issues if there's continuous monitoring from the insurer side of the consumer's environment?
Well, they're continuously monitoring, I guess, a few things. They're looking at the controls and whether or not these controls are effective or whether they've failed or not. But they also are using the cybersecurity ratings to do these types of external scans. And through those external scans, they're not so far we haven't seen any of that type of privacy or IP infringement because this is what the organization puts out publicly.
I think there's going to be different appetite for varying levels of access to the enterprise environment, varying levels of monitoring for purposes of cyber insurance. There's going to be some organizations that may welcome it, because they may find it useful, helpful as a part of getting their cyber insurance coverage, whereas others may draw a hard line in the sand and go, well, nope, we're not going to do this. And there may end up being different types of policies, different structures, different segments of the market where these things are also aimed at servicing. And it also depends on how we're looking at monitoring as well. I think if we're looking at the US, if we're looking at Western Europe, there's going to be a lot more hesitation for this type of hands-on, continuous type of approach. But already in places like Japan, we've seen some policies where in order to even qualify to purchase the cyber insurance policy, you are allowing the insurer to install basically EDR agents on all of your devices, and they're the ones monitoring it for you. But that's being sold as like a value add of getting cyber insurance in that market.
Yeah. I think we've Sean's pointing out we've seen that in cars. Like get a reduction on your rates if we can put this device in your car and verify that you're not speeding, you're not driving recklessly, anything like that. But Katie, go ahead.
That's actually the answer. I was musing on the idea of, will it be similar to car insurance? Will the insurers then offer benefits to the companies who are like, yeah, sure, go ahead and monitor my environment, and those who are a little more risk averse, a little more privacy forward, even if it's not invasive monitoring, which I understand it won't be, but it could potentially offer up benefits to companies who are just a little more skeptical. And I'm not sure that feels right. I'm not sure what the answer is, but I'm not sure it feels right. Like, hey, let me monitor you, and then you get benefits. That makes me personally a little uneasy. So I guess it's good that I'm not making those decisions for my company.
Well, it paints a target on the insurance. The insurance company, right? Like if they've got access into all these, we've already heard that that's how a lot of ransomware crews decide how much ransom to ask for, is they figure out what how big of a policy they got first, and they'll ask for 80% of whatever that policy is or something like that. Heidi, Alla, do either of you have a sense for if this is experimentation, or if we're going to see things like continuous monitoring sticking around long term?
It feels like it's more than experimentation. My sense is that it it will stick around, but also it will evolve based on just that privacy appetite of organizations. Because if they don't want to be monitored, but they desperately need that insurance for whatever reason, maybe their boards are asking for it, maybe their customers are asking for it, then they're going to have to find some sort of middle ground for it. But, as with anything, right, we do things that are bordering on creepy, someone pushes back, and then there's change in the market. So if it does, I think, go in that direction, then we'll probably see change. What do you think, Heidi?
I would agree. There's so much pressure on the insurers today to stay profitable, but then also stay in this business, that something has to change. And every step of the way where we've seen some major change to cyber insurance, cyber coverage, these policies, it's because of these points of evolution where something has gone sideways.
Yes.
And something had to change.
Yeah.
Like with the war exclusions is a big one, like NotPetya, that kicked off a lot of this, the efforts to close that silent cyber loophole, to really firm up language around war exclusions as well.
Yeah.
Yeah, I think it was Merck who had the big fight, right, over getting something paid out, the big shipping company that was shut down for a while.
Mm-hmm. Yep, they were one of them.
Yeah, Maersk.
But yeah, I was just sitting here thinking, like, what about insurance in other markets? Like, are there insurance companies with direct access to surveillance cameras in businesses and things like that? Or, this seems like it's pretty unique to. Well, I mean, there are a lot of unique things about cyber, I guess, but I don't know, like, how common this is in other insurance markets, because I'm just not familiar with insurance in other markets, at least not business insurance.
Yeah, I'm outside of cyber insurance. I'm not as familiar with those business technicalities. I would say, though, let's say you have some sort of insurance specifically for things like fires and floods, you would have the insurance representatives coming in to make sure that you've fireproofed, that you have, your structure is up to code. And that can also be seen as a little bit more hands-on. I think, though, because cyber insurance market is a bit newer, in some ways, we might see some of those same requirements from other industries, but at the same time, it is so unique, right? The cyber landscape continues to evolve, and it's so hard for the insurers to just constantly not only keep up with what the new threats and new attacks look like, but then also go back and rewrite all of their contractual language. So yeah, it's a bit of a unicorn when it comes to insurance.
Yeah, so we've got some links in the show notes to some of the reports that you've both worked on. But is there anything else up and coming? Any new coverage or additional coverage you're doing? Any webinars? Anything like that you want to share with the audience?
We do have one more report that if we in the middle of writing now. So this was a series of 3, and this is the third one that's coming. So this third one is focused on, we're calling it like the CISO deep dive. So it's more of an in-depth look at, well, what does cyber insurance mean for a security program? How does it impact incident response? What are some of the common control requirements that the insurers look for? What should you expect, in the claims process? And then also, what's the role that the CISO can expect to have in a renewal process for insurance? So those are some of the things that we're going to address in the next piece that we do.
Yeah, it sounds very interesting. Any idea when that's general time frame when that's coming out? No pressure.
Ooh. I did in March. Right, Alla? This is also with Jess Byrne at Forrester, who covers incident response. So we're teaming up with more folks.
Smart answer, Alla. I think all of us here, except for maybe Sean, used to be industry analysts. So a lot of us can relate with that. Well, thank you so much, Heidi and Alla, for joining us on Enterprise Security Weekly today. This is a lot of fun and one of these kind of fast-moving areas that we like to keep an eye on. So thank you for coming on to help us out with this.
Thank you.
Yeah, thank you.
All right, stay tuned. When we come back, we're going to talk insider risk with Joseph Blankenship, also from Forrester Research. The shift to remote and hybrid work over the past 2 years has accelerated application development on cloud infrastructure. However, securing these new assets has lagged behind. Qualys CloudView, the next generation of cloud security posture management, delivers an end-to-end multi-cloud security and compliance solution encompassing the entire application lifecycle from build to runtime. CloudView enables enterprises to assess their cloud security and compliance posture, identify risks and gaps, auto-remediate issues, proactively enforce best practices, and prove compliance in audits rapidly and efficiently. Identify your most vulnerable cloud assets by visiting securityweekly.com/Qualys. Welcome back to Enterprise Security Weekly. Do you have a specific guest or topic that you want us to cover in one of our shows? Submit your suggestions for guests by visiting securityweekly.com/guests and completing the form. We review suggestions monthly and we'll reach out to you once reviewed. All right, for our second interview today, we are talking to Joseph Blankenship about understanding and protecting against insider risk. Joseph is the Research Director for Security and Risk at Forrester. As Research Director, he guides the analyst team researching security leadership and also helps clients develop security strategies and make informed decisions to protect against cyber attacks. Welcome to the show, Joseph.
Hey, thank you for having me.
I'm going to go with JB after this. I've heard enough people call you JB just before we went live again that now I feel awkward calling you Joseph.
As you should.
All right. So let's lay a little bit of foundation here. So when we're talking about insider threat, I love this topic because when I was a chief incident handler, when I worked on the enterprise side, like I didn't have any cool outside attack stories. Like I've got nothing from back in those times. Of course, it was back when, we didn't see quite as many of those. The company I was working for wasn't quite as visible as others were. But still, most of what I was dealing with were insider threats. And I feel like a lot of those stories go untold. And like the outside perspective, I wonder if you come to the same conclusion or if you see the same things, JB. But I feel like people don't fully appreciate how much of that there is just because it doesn't get announced publicly. Like a lot of these are just handled internally and nobody ever hears about it.
Yeah, it's like one of those things where people don't like to air the dirty laundry. To me, like insider, when insider threat happens, especially if it's a malicious sort of incident, there's a tendency, I think, to not want to report that if you don't have to. The research, Forrester's research, actually indicates, though, that about 26% of data breaches are directly attributed to some sort of insider threat, whether that's maliciousness, hey, I meant to do something bad, or accidental, I tried to get around a policy and just goofed up, or I just made a mistake in some way.
Well, let's take that to the next logical step, and I believe you break down insider threat into a couple different categories. So if you could outline those for us, I think that would be great.
Sure. Yeah. I mean, the one that everyone always thinks about, they hear threat, they think about the malicious person, right? The person that intends to go do something. Maybe they're stealing data. They're moving to a new job, so they want to take stuff with them. Maybe they're angry at the company, so they lash out. They sabotage something. There's a lot of like really interesting examples where, especially folks have locked up systems, they locked people out of networks. Maybe they wrote a little code to kind of do a little
Logic
damage
bomb
on the way out the door.
Yep.
Yeah. Then like I said, you've also got sort of what I call the accidental insider. They realized that there was a safe data handling policy, but they figured, hey, it doesn't apply to me, maybe, right? I don't want to lug a laptop home, so I'll just email all this work home to my and this will show my age, right? I'll email it home to my Yahoo account, and I'll just work on it at home. And what they don't realize is, as soon as they send protected data outside, the secure area, then technically it's a data breach. It could also be, something like they left the computer unlocked and somebody got into it that way, or they saw that they knew they had a safe data handling policy, but they decided to use Dropbox anyway, even though it was banned, or anything like that. The last one would be a compromised account. Sometimes it's really hard to ascertain whether or not an account's been compromised, or if it's a user that's kind of gone rogue. And I think that Adrian, kind of getting back to your background as an incident responder, is one of the first things to figure out. Is this the actual user ID, or has someone compromised that ID from the outside?
Right. Yeah, and that can be either really obvious or not obvious at all, depending on how the attacker has connected to that account and is leveraging that account. Like if they're leveraging it, like something we saw recently, the Circle CI breach, looked like the engineer unintentionally installed malware, thinking it was something else,
right.
Which is now a new trend we're seeing. We just covered this in the news last week, where Google's just shuffling out all kinds of sponsored links that link to malware, and
right.
You can't trust any Google sponsored links anymore. Like, I thought this was a solved problem years ago, but I'm curious if that's what happened to Circle CI in this case. So once you're on the person's laptop, like you can look pretty legit, right?
Right. Well, if you remember a couple of years ago, this happened to Twitter as well, right? They kept calling it insider threat, and it started looking more and more like a couple of engineers had their accounts compromised. Whether or not they allowed those accounts to be compromised, I think that's up for question, but it definitely was an external actor using the internal IDs.
Yeah, definitely cases where you see the angry ex-employee or the soon-to-be ex-employee.
the soon-to-be angry ex-employee.
Yeah. Or I mean, that's one of the things that came out of Mudge's testimony about Twitter and how bad the controls were there. Saying like thousands of developers had access to the private code base. And a couple of them just popped up on Twitter and said, hey, haven't been there 18 months, still have access to everything.
Right. By the way, do you want to buy into my Bitcoin scheme?
Yeah, let's auction off my private Twitter access. Oh man, Sean, go ahead. You've got a great question. I approve of this question because that's my favorite movie.
Thanks, Adrian. Hey, GB, good to see you. Meet you. When I hear the term insider threat, I tend to think of Dennis Nedry, the character in the movie Jurassic Park. And so
right?
he was paid money to steal specific items from the park, specifically the DNA information that could be used to clone dinosaurs. What tends to drive or motivate insiders for this insider threat type perspective? Is it corporate espionage, which may involve money or Bitcoin, or is it something else?
Yeah, what a phenomenal question. And by the way, I think that movie is like an example of several different types of insider. Right, you've got sabotage because he locks everyone out of the systems. You've also got the IP theft. Yeah, typically we see several motivations. So certainly the financial motivation that happens. Hey, I can make some money with my with my access, or with the data that I can take with me. Sometimes it's motivated by, hey, I have a feeling of ownership. I worked on this code. I built this client base. I did all of this work. I built this IP. I'm going to take it with me to my next gig to get a head start. That's one of the reasons they hired me, perhaps. It could be that I've got some sort of ideological thing. Like I found out, this is just, theoretical kind of movie stuff, right? I found out the company was dumping toxins into the water. So I feel like I should expose that and dox them, or take a bunch of documents with me and expose it. It could be some sort of hey, I'm just angry at my manager. Adrian, you kind of alluded to something that's happening right now all over the news, especially in the tech world. We're laying people off left and right. So maybe my friends got laid off. I realized I'm going to be a target of a layoff, and so I'm either going to hedge by stealing data, or maybe I'm going to be angry and do something to do some damage, damage some systems, write some bad code, lock people out of systems. There's plenty of examples where people have kind of done that on the way out. And then there's kind of the one you mentioned, corporate espionage. This is one that the FBI is warned about time and time again, where and this is speaking from a U.S. Perspective, right? Foreign nationals that are employed someplace take some IP, and then they try to escape back to wherever they came from, or whoever's paying them with that IP. And that's one of the ones that actually gets in the news a lot. It's one of the ones we get to find out what actually happened, because typically when that does happen, that's actually a law enforcement incident, and then it gets exposed in the court discovery.
Yep, I have a few of those stories, corporate espionage, and definitely with the state actor angle as well, right. the foreign nationals. Yep. I've got a few of those. Being this close to Oak Ridge is the hint as to why I had that problem. But yeah, it's crazy. Yeah, most of it was financially motivated, but yeah, we did have a few as well. Yeah. Yeah. So talking about insider threats, I suspect like one of the scariest things, just thinking while you were talking, are the ones who don't do a bunch of damage, right? Like right. They maybe want to keep a back door into something, just in case, right? Like all the jobs that they've worked. And that's kind of related to the scenario I was alluding to, where this individual in particular would do 6-month jobs where they would come in, work on the network, leave. And every company that they contracted with, was now had an issue because that individual had come through there and left their stamp. So now with the pandemic and the internal network of a company existing on people's home networks and things like that, how is that impacted insider threats? And I imagine it's further complicated things, right?
Yeah, definitely complicated things. I think probably a couple of big things, right? And again, I'm going to show my age, right? I remember like back in the day when you quit a job, they came and you turned in your computer and all that, or they took it from you. And then they checked if you're carrying your box of stuff out. You had your big copy paper box full of stuff. Somebody went through it and made sure, hey, you didn't have a bunch of printouts in there, right? Because, any kind of removable media, would have been really hard to steal anything. And we moved way, way, way beyond those days. So now we don't have even that little bit of physical control where we can look at somebody and see what they're doing if they're trying to do something wrong. One of the things that happened, with the pandemic is we sent a lot of folks home. And we were relying at that point a lot on things like user behavior analytics. And the user behavior analytics, were very tuned to what happened with a pattern of life that said, I wake up in the morning, I go to a place, I log into a machine at a place, I do some stuff, I leave. And then if I started doing things, anomalously, in the middle of the night, then it would trigger an alert, hey, JB is out here downloading documents at 1:00 in the morning. That's really weird. During the pandemic, when people were, teaching kids at home, and trying to deal with family life and working remotely, all this model sort of blew up. It made security teams a little bit blind. We also didn't have people necessarily hitting the corporate network, where all the UBA stuff existed. So it kind of made us rethink, hey, if we really want to understand what people are doing on computers, we have to be on their endpoints. And it kind of shifted from the sort of network, first UBA sort of a approach to let's get on the endpoint and start figuring out what people are doing on the endpoint. Where are they dialing in from, or dialing in again, showing my age, where are they remoting in from, that type of thing. Seriously just made it easier for people to, if they wanted to do wrong, to do wrong, at least for a window of time. I think the other thing that happened, right, is there was a lot of unease. Am I going to lose my job? Are we all going to, make it through this? And so, when things like that happen, people start, trying to hedge their bets. They may collect a little extra data. They may, say, hey, if I have to move on, I want to be ready.
Yeah. Sean,
sort of like having your go bag full of data,
Yeah.
Do you feel that organizations that are targeted by the external attackers, the things that we hear about in the news, do you think they're more likely to have insider threats or threat issues versus not? Or do you think that matters at all? I mean, certainly industry and the type of company they are, but effectively, do you think that, or do you feel like motivations tend to align between attackers from the outside versus attackers from the inside, the insider threat scenario?
Yeah, I think a big part of it too is access, right? If I feel like I've got unfettered access to something, right? You kind of the typical logic on the external actor is, hey, if I'm just going and trying to find a target, I want to try to find a soft target, if I can, right? Instead of like expending some expensive 0-day, one time, to gain access to something, instead, you're going to try to find an easier angle. The thing that's interesting about insider is we all have insider risk of some degree, especially if we've got intellectual property, if we've got customer information, all of these things. Some of the people that I talk to about insider risk or insider threat, they've had an incident of some kind, and they, kind of understand, hey, I never thought we'd be a target for something like this. I don't know why it happened. They didn't actually start to value the stuff they had. Some of these could be like smaller, manufacturing organizations that actually have IP. They have plans, they have processes, they've got recipes for things. So when you've got anything of value like that, you may be a target for somebody to misuse it.
Yeah, well, thank you. That's very interesting. To your point earlier, you said that we hear about what happens with external attackers, the things that are in the newspaper, things that companies have to disclose with a breach scenario. With Insider, you mentioned that really there's no real desire to share that. Do you have any stories or examples that you've heard of that you could share with us about things that have been done, or maybe allude to what's been done based on what has happened in popular culture, like a movie, that could help our audience better understand some of the risks that come with insider threat and what's happened and how that can be just as bad, if not worse, than what an external attacker may do?
Yeah, I can't remember the name of the company off top of my head, but I appreciate that you said the movie reference, right? There's two besides Jurassic Park that always come to mind, and one of them is Office Space, right? Because you've got also several types of insider threat that were kind of demonstrated there. You've got Peter Gibbons, who installs the malware that takes the percentages of a penny and puts them in a bank account. Somebody actually did that recently. And they ended up being prosecuted for it. And one of the ways that they caught the person is that he had actually written Office Space into his code. This is like one that actually did make it into the news, because it was so, they had to prosecute the person because he had stolen a significant amount of money. It was also kind of interesting because he had actually put that into the code that he used to steal the money. You got also think about Office Space. Yeah, right.
That's really bold.
He was actually pretty smart. He didn't use the same bank that he worked for when he wrote it. At least he wasn't that dumb. But he did put Office Space into the code. That's one of the ways he got caught. But if you think about the movie Office Space, you've also got the character Milton Wadhams with his red stapler. And he got so upset about, he got fired, they took his stapler, they put him in the basement, all those things, he got disgruntled. Then what did he do? He lit the building on fire, right? So you've got Peter and you've got Milton, and Milton ended up making off with all the money that Peter tried to give back, for anybody who's paying attention to that whole scenario. So yeah, I mean, there's stuff like that. That's sort of the movie example. Some of the other things that happen though, that sort of get swept under the rug, are way more mundane. They're not necessarily like some sort of, I've created some kind of malware and that type of thing. It's more of just trying to take IP. And typically there's a series of things that you can follow. Like if you are doing some sort of behavioral analysis and kind of looking at what users are doing, they'll start exhibiting behavior where they're getting ready to steal something. They'll start staging data. They may start changing file extensions, or they'll zip it up and encrypt it and say, "Oh, full security, they'll never know." And sometimes, the external actor may be telling, or an external actor may be telling the person internally, this is how you do it. Here's the playbook. Get the stuff that we're interested in, do these things, and then drop it on a USB or something like that. And, chances are they won't see you doing it. One of the other things about insider threat, and a very well-known person in the security space, when I interviewed them, I think for my first insider threat report, she told me, she's like, if a company doesn't think they have an insider threat problem, that means they're not looking. This actually is a problem that you have to look for, because think about it. The insiders are people that use computers. Your contractors, your partners, your employees, all of that kind of stuff. So they look like they're going about their daily lives and doing their thing. But if you're not looking for the little telltales of what they're doing, you may not catch them trying to exfil.
Yeah, so that's I think that's a great place to move the conversation to, because something I spent a lot of time doing on the side, one of my primary research projects is analyzing breaches, going through postmortems where there are details to go through in the public domain. And in most of these insider cases where you had, an actively, let's call them angry admin cases, right? The admin that was underappreciated and overworked. There are so many red flags and signs before those people ever go Nova and start causing
start
damage.
Doing their thing.
Yeah. So the question here is, what should companies be doing, to be aware of this, to maybe, head it off before it gets that bad, or, detect it before it gets that bad? Because most of these, they seem like they simmer for a while before they explode. It's not just like a sudden thing.
Yeah, this is like one of those things too, Adrian, where it's the old "if you see something, say something" sort of a deal. So let's just say if you hear Milton Wadhams say, "I'm going to burn the building down," and he says that in the movie, right? "I'm going to burn the building down," and no one takes him seriously. Maybe you tell somebody, right, "Hey, Milton's going to burn the building down. You might want to keep an eye on him," right? And so if we have an insider risk program of some maturity, we might say, "Hey, we're going to watch what Milton does from here on, and make sure he's okay." And if, to your point, if it kind of gets to gets to the stage that you think someone's going to act, maybe you intervene and just say, "Hey, what's going on? Tell us, why are you disgruntled?" One of the ways this shows it just terribly, right? We hear about it all the time in the news, is somebody gets disgruntled at a manager or coworkers, and they come back and they have some sort of workplace violence incident. That has absolutely nothing to do with cyber attacks or technology, but it does have to do with insider risk, because you've got someone who's probably been showing outward signs that they're unhappy. So I think, to answer your question, is you've got to have, some degree of a insider risk program, depending on, what industry you're in, the sensitivity of the stuff you have, your risk tolerance, all of those things. You're going to say, "Hey, this deserves some sort of a dedicated program to look at users and make sure they're okay." Now, Forrester did make a prediction this year. We'll see how it goes. We predicted that a C-level executive would get fired because of their employee monitoring program, because sometimes these things can go a little too far and start becoming a privacy concern. But kind of finding a good middle ground with a mature insider program means, hey, we're going to go look for those telltale signs they were talking about, Adrian, and we're going to try to collect that information and keep an eye on the people that are exhibiting, that maybe they're going to take some sort of an action.
Yeah, Sean, go ahead.
Thanks. So you were talking a little bit about the companies and things that they should probably have in place. If they're not looking for it, they're not going to find it. Find what they're looking for. And it sounds like there's a very tight connection between what spies tend to do and what insiders do, and maybe those motivations often tend to align as well. I've done a lot of work in different spaces that have dealt with insider threat, as well as helping kind of ferret that out and identify ways to kind of notice that? And like you're saying, looking at the behavior, people working extra hours, they tend to have access to files. I mean, the Snowden incident probably shined a big spotlight on this, certainly for the government space. But in the private sector, as you mentioned, like corporate espionage is very much a thing. It's something that should be people should be aware of, whether it's IP or something else. Maybe it could be a customer list. I know it's some financial organizations, their organization chart and who works in different areas and on different components of the business are very tightly held secrets. But do you feel that companies are prepared to deal with an insider threat scenario? And what should they do to better prepare to detect and handle insider threat when they discover it?
Wow, what an awesome bunch of questions, right? If you had asked me that question 5 years ago, I would have said most of the companies that I talk to and work with were not prepared to handle an insider incident. They had no formal program or anything like that. You know, one of the analogies I like to use with folks, we start talking about insider and they're like, hey, I'm going to go buy some technology. I'm going to go get a user behavior analytics and have an insider program. And I'd be like, that's fantastic. You should have an insider program. But have you thought about what you're going to do when you catch an insider? What are you going to do? Yeah, have you thought about the outcome? Right? You know, what do you? And you know, early on, I'd hear people say things like, "Well, if I find somebody doing something weird, I'll just call the manager." I'm like, "Yeah, that'll backfire big time. Yeah, you're going to wear people out. You're going to make people quit. You're probably going to draw some lawsuits because you've damaged somebody's career." So yeah, that's one way to do it. The other way to do it would be to say, "Hey, we're going to do an insider program." And now we're going to go and work with our HR partners, and we're going to go work with the general counsel and figure out what are our processes going to be? What are we going to do when we decide that someone is doing something maliciously versus accidentally versus compromised account? How do we handle those things? And then we need to have a process for remediating. That might be, hey, if it's accidental, we go and do a coaching session and say, hey, please don't do that anymore. If we find out that it's maliciousness, then maybe we end up having to fire the person. And one of the reasons we don't really hear about this a lot is, hey, that person gets fired, they move along, no one says anything. Another outcome is they've done something malicious. We've determined that it's material, and now we have to call in law enforcement. Or, to your point about counterintelligence, there are a ton of parallels. You find a lot of former counterintelligence people actually working in this field, especially in the financial space and the pharma space, where they've got really expensive IP to protect. But then becomes a law enforcement, sort of a thing, especially with foreign nationals, where you have to bring in, perhaps the FBI, and you have to prosecute the person. And then that's when, to Adrian, to your point, right, we actually get to read what happened. What was the chain of events that led us here? But if you don't have all of those things kind of prescribed, and you haven't already figured out the process, you actually open yourself up to some litigation, potentially, corporate brand damage, all the unfun things that can come from pointing the finger at the wrong person.
Yeah, we've got some of our listeners have probably guessed or know already. We've got a back channel chat in the Slack, and we were talking about like your example with the tell their manager. Like the first thing me and Sean are thinking is, what if the manager's in on it? What if they're involved?
Those are the best too, right? Like when you find out, like there was one someone was telling me about where the CFO was actually the person behind the whole thing, and the CFO had compromised a SOC analyst. So the SOC analyst was pushing down the alerts. And then there was somebody else that actually was moving the money around in scheduling wire transfers. And so they actually caught a conspiracy between the CFO, a SOC analyst, and then I guess somebody else in the finance department that was instrumenting all of the whole thing. But yeah, to your point, they had caught the person with the wire transfers and they called the CFO. The CFO just says, "Oh, wow, that's a surprise to me. Wow."
Yeah, there's a great example I just shared in our Discord. There's a company, one of the few cases where a company was destroyed by a breach. Company, Australian registrar and hosting company called Distribute.it, and I just dropped that YouTube link in there. The guy who owned the company actually does a talk, and he explains how the whole thing went down. and like they rebuilt the whole company twice, but like he still had access to systems. Like they were never able to fully lock him out of systems, and eventually they just had to give up.
Oh wow, yeah,
it's a hell of a story.
That's a bad day.
It's a very bad day. Rare, very rare, but it's still worth a listen and worth. I believe strongly we should study cases of not just insider threats, but security incidents in general, to see what we can learn from them.
Well, you learn a lot. What led up to it, how did they orchestrate it, and then how could we have made our response better? Sean, you asked that question about how do we prepare. One of the things is you practice this just like you would an external incident. Let's just work on our scenarios. We build scenarios and we kind of work. What does that playbook look like? Who do we bring in? Who makes the decisions? And kind of play it all out. If you don't practice that, then chances are when it happens, you're going to have a failure of some sort.
Yeah. Yeah, I think Katie had a question for you.
Yeah, so all of this stuff is actually a lot more interesting than the question I have, because you do have to think, from big to small, right? Like, what are you going to do? How are you going to handle this? But if you get down to tactics here, obviously you're looking at access controls and permissions and privileges and all that kind of stuff. We've been talking for years about look at the behavior of your employees and how did it change? Does it change? Is somebody going through a really hard time that would make them more susceptible to insider threat? Something, like bankruptcy or divorce or whatever the case may be.
Personal finance, right?
Exactly. But what tactically, other than, looking for those signals, are there tools that are really good? There have been tools on the market. Some of them border on creepy. Some of them are a little too high level, but are there tools that can help businesses suss out when there is this suspicious behavior and mitigate some of those issues in real time without stepping over a line that might cause an HR or a legal complication?
Yeah, there's definitely much better tools. And, I was kind of making a little light of UBAs earlier. UBA can certainly be part of that tool set as well, right? Looking at the employee behaviors. But again, I think this is like a scenario where you've got to decide what you want to do. Let's just say you get an alarm through your user behavior analytics or whatever you're using to monitor employee behavior, and you start suspecting somebody. Do you immediately say, hey, I'm going to lock this person out of the account, or do you immediately say I'm going to do a password reset, something that could tip them off, or do you want to gather enough evidence that if you need to fire them, call law enforcement, or do anything else, you're going to go and start evidence collection. So it becomes more of a forensic exercise. So there's, obviously tools that'll help you do that. I think one of the other things that has come online in the last probably 5-ish plus years have been dedicated insider threat tools. Things that are in to your point, Katie. Some of these things are borderline creepy. And one of the things I tell companies all the time is like, okay, you're going to do employee monitoring. Make sure you separate anything you're doing for performance monitoring from your security program. If you try to blend the two things, you've really muddied the water. You've also kind of created an attitude of distrust, with your employee population. We've done some research that kind of said, hey, don't go overboard with your monitoring program. Make sure your monitoring program, makes some sense. So I'd say it goes from looking at the employee behaviors. There's also tools that do file behavior monitoring. They can actually kind of look to see how people are working with files. If they're doing things like changing file extensions, encrypting data that maybe they shouldn't have, or they're moving them to directories on the computer. All these things that kind of like look like suspicious activities when you put them all together. Just taken one by one, they're fairly benign, but taken together, they indicate a pattern of behavior that will probably indicate that they're going to do something wrong. But yeah, I mean, I think it's actually probably more of a suite of tools. Even getting to something as old school as DLP. If you get enough DLP alarms on somebody, and you combine that with some HR data, hey, this person's gotten several warnings about threatening coworkers, or this person had a bad performance review, or this person's on the short list maybe to not be here anymore. You put all those things together, now you've got a case to say this person's going to do something probably not on the up and up.
As far as sort of our work situation goes, obviously there was a mass migration from offices to home offices, and now we're more of a work from anywhere, remote work, hybrid work type situation. And you need to give access. You need to make it easy. It's obvious that work from anywhere works. Businesses are getting great benefits from it. But is there some sort of trade-off in terms of privacy and monitoring that companies can lean on? Because it would be easier if somebody had malicious leanings. It would be easier for them in a remote environment in some ways for some things to cause trouble.
Yeah, I've got an opinion as a security person, right? If you're on a corporate issued device, accessing corporate issued things, working with things that were created while you were an employee, you should not have a overwhelming expectation of privacy. I know that opinion is not shared in some countries and by a lot of people, but largely in the U.S. that's also the prevailing wisdom. Right, you should not have this expectation of privacy on a company-owned system. One of the things I also advise people about is don't tell people how you're doing, a insider risk program, but tell them you have one, and educate people about the responsibility they have when using corporate systems and with working with anything that was created, on company systems or on company time while you're an employee, all those kinds of things. For one thing, if you can prove that you told the person that what they were doing was wrong, that does indicate maliciousness. Definitely helps you should this thing go to court. That's something I advise people all the time. I'm like, treat every insider incident as if you're going to end up in court, either them suing you or you prosecuting them. If you've got everything buttoned up, you've got your evidence collected, you've done all the processes, by the book without exceptions, you're going to be a lot happier should that day in court happen.
It's a lot of extra work, though.
No, right? Yeah, no, it totally is. But think about it, right?
Closet full of forensic copies, forensic hard drives and notes, and yeah.
And then if somebody targets those files, you're screwed.
Yeah. Well, that becomes like the argument I used to have with people, where they wanted to keep all their security logs. Like, hey, we've got an on-prem repository in our SIM for all these security logs. I'm like, why do you think you're better at securing those at a cloud provider? And and they would be befuddled by that question. They're like, well, I guess probably not.
Yeah. No, it was a great point you had there. Back when I used to be a chief incident handler on the enterprise side, I also talked to all the new classes, all the new folks that would come through for orientation, and I would give them that talk. I give them that spiel of we can see what websites you go to, we can see your email. Please don't put me because I'm like, it's me personally, guys. Like, please don't put me in a situation where I have to read your email and go through your browsing history. Like, I'm just asking, please don't put me in that position. And I don't know if it helped, but I feel like they needed to know that I've just been through some awful investigations, stalking, like not FBI level stuff, but certainly like local law enforcement stuff. And it's, it's a rough gig sometimes.
Definitely a rough gig. I've talked to, some insider risk professionals, and they have a program, exactly what you're talking about, Adrian, where they're actually kind of leaning into, let me educate everyone about safe data handling. and the fact that we do have a program here, to make sure that all of our data is protected. Not necessarily that, Big Brother is watching you, but, hey, we're going to make sure that we don't have bad actors, or if we do have bad actors, they get caught. And try to reinforce that if you see, somebody here or suspect somebody is doing a thing, please report it, and give them an out to be able to report that even anonymously, so they can, kind of flag whoever that person is or that ID is and, take a look.
So before we wrap up here, I'm kind of curious if you have any stories like I imagine it's got to be tough research to do because there's a lot of information you don't necessarily have. But I don't know if you have any interesting anecdotes you can share, anything like that before we wrap up here.
Gosh, I think one of the ones that was most interesting to me as I was working with a power company, with a utility. And they were spinning up an insider risk program. And, usually, I ask, why? Why now? Was it a board member that came to you and said, hey, we're really worried about this? Was it, an executive read something about insider risk and they were like, oh, wow, what are we doing about that? Or did you have an incident? In this case, they actually had an incident. And really what had happened was a disgruntled employee was basically doxing one of their executives and sending stuff to the media that this executive was doing. It was basically the equivalent, Adrian, of reading this exec's emails and sending private stuff to the media, as well as some stuff, like upcoming plans that maybe the local population wouldn't like. And this executive was just going nuts. And figured out, hey, we're going to have to call in some sort of forensics firm to figure out who's doing this to me. This had gone on for like a period of time. And then after that, they were like, okay, never again. We're not doing that one again. I think another, really interesting one was in this kind of borderline between maliciousness, and sort of accidental, but there was an employee for a tech company that was, hoarding basically, code that they had created, as well as basically any sort of PII they could lay their hands on. They were hoarding it. And they ended up having to go to law enforcement, doing a search warrant on the person's house, and found out, you're talking about the closets full of forensic evidence. This person at the time had, drive after drive after drive of company IP, PII, corporate accounts, all of this kind of stuff that he had just collected. And he figured, hey, I'm an employee. It's mine. I get to use it. I had access to it. Why shouldn't I have it? And he had taken all this stuff home, and it took him a long time to kind of go through it all and figure out what he had done, what he had taken, and then prosecute.
Yeah, if you don't have all that logging set up, I imagine a lot of those cases, they were not set up to collect that evidence exactly. Before it happened. Right.
But I think they started in this one. They started suspecting that the person was doing the thing, and so they kind of leaned in and turned logging on and started paying attention. But you're right; they didn't have the historical. They didn't find out how big the problem was until they actually got to the house and got the data.
Yeah, no, that's a common mistake I've seen is trying to stop the activity before you've collected any evidence, and then there's not much you can do with it. Because you don't have any evidence.
yeah. But there again, you've got to have a plan for that. You have to decide what you want to do in a situation like in the case of the wire transfer thing with the CFO and the SOC analyst I was talking about before. They actually made the decision, kind of a split-second decision, to stop a wire transfer before it went out and shut off everybody's access. They felt like, hey, we've gotten enough evidence now. We don't want the money to be gone. So it was kind of like, one of those, hey, this is about to happen. Let's shut it down.
Yeah. Yeah. So I think for me, my big takeaway today has been that insider threat is not a technical problem that can be solved with a product purchase, right? Like it goes a lot deeper than that. You have to think through the process. Anything else you want to add before we wrap up here? I know we do have some links to articles, blog posts in the show notes.
Yeah, I think a couple of things. Yeah, a couple of things I would just end with, right? I think you're absolutely right, Adrian. It's a human problem. It's not a technical problem. It's not a quote unquote cyber problem. And usually when I'm advising folks on this, I tell them technology is the last step. The first step is try to figure out your risk, build a program, get buy-in, figure out who your stakeholders are, who's going to make decisions, build all the processes, figure out what technology you already have, right? How you can leverage that. And then if you need something else, a dedicated insider risk system, UBA, whatever it might be, forensics, then go get that. But make that the last step. Don't put the technology first. It's a people, a process, then technology issue.
Well said. Well said. JB, thank you so much for joining us on Enterprise Security Weekly today. This was a really fun topic.
I love this topic. So thanks for having me, Adrian. I love to talk about this stuff.
All right, we'll be right back in a few moments with the weekly enterprise news. Managing and protecting the world's grueling number of endpoints, enabling Tanium's customers to see, control, and protect every endpoint everywhere. Tanium's mission is to provide certainty in uncertain times with the industry's only converged endpoint management. Trusted by the U.S. military and the majority of the Fortune 100, Tanium helps manage and protect nearly 30 million endpoints. Tanium, the power of certainty. Visit securityweekly.com/Tanium to learn more. Welcome back to Enterprise Security Weekly. Don't miss any of your favorite Security Weekly content. Visit securityweekly.com/subscribe to subscribe to any of our podcast feeds and have all new episodes downloaded right to your phone. You can also join our mailing list, Discord server, and follow us on social media and our streaming platforms. All right, now for the Enterprise Security Weekly news. You can check out securityweekly.com/ESW304 if you want to check out the show notes, follow along with the different stories. We've got 30 today. We're probably not going to get to all of them, so you'll want to check that out, see what you missed there. I've got notes on them as usual. Let's jump in here. So, reasonable amount of funding here, but it's interesting. I noticed a trend that a lot of CEOs are getting shuffled around. A lot of executives getting shuffled around right now. I wonder if that's part of what's going on with the market.
Shuffled around in what way? Shuffled around as in removed or re-added? Because if we look at story number one, funding, Savient raises $205 million, and the founder rejoins as CEO. So it looks like they're even coming back as well.
Yeah, I guess people saying, hey, what we're doing isn't working, or I don't know, maybe there's a shift in the business strategy because maybe it's tougher to raise money, or the investors have different expectations, maybe so they got the wrong kind of CEO for whatever the investment strategy is, or what the board is asking for. I don't know.
Yeah,
it's an open question for me. I have no idea.
There's a million different reasons why CEOs get removed. There's another million different reasons why they get added back. I think fundamentally in 2021, 2022, we overinvested and we caused a scenario where CEOs were essentially required to say, hey, we're going to run to this massive number in the future because of the overinvestment. And they weren't able to make it. And CEOs basically have three jobs, right? Well, two or three jobs. Job number one, they have to make sure you never run out of money. They got to raise capital. Job number two, they got to forecast the business accurately so that they can model the business and build the business, in lockstep with the actual revenue growth rate. And if they do those two things, that's a good. Oh, and then rally the troops, right? Keep people going in the right direction, keep people motivated and incentivized. If they do those three things, that's a great CEO. When you're in a scenario where the private markets were so detached from reality of what could and couldn't be achieved in a business, it makes it very difficult for CEOs to predictably build revenue to a model that makes sense, right? And so a lot of younger CEOs, first-time CEOs, second-time CEOs were in scenarios where they just couldn't win. It was impossible for them to win in the current market. And so many of them stepped aside, were forced aside, things like that. But in this case with Savient, coming back is a totally different story. And I'm not exactly sure what the impetus to bring him back is, but clearly the board thinks there's a reason to jumpstart the business on the back of his support.
You saying sometimes the only winning move is not to play? Is that what you're saying?
Absolutely. Yeah, I like how you distill my rambles to, one direct War Games reference.
Yeah, I do love the movie quotes. I do love it.
And there are different types of CEOs too, right? There are high-growth CEOs. There are CEOs who are really good at maintaining a course. There are CEOs that are really good at other types of deals. So, everybody has their strength, and, a CEO is not just a CEO is not just a CEO. And so if the economy is different, if the company direction is different, there's so many things, like Tyler said, where maybe you had a really high growth CEO in a role, but now the market's hitting the skids a little bit. It's not necessarily that the outgoing CEO was bad. It's just that they're not the right fit anymore. Or somebody's a better fit, or, who knows what happens. Maybe somebody got burned out on that role. Maybe they decided to take up a career in basket weaving, so it's really hard to say without knowing the specifics, but I think it's also really important to point out that a good CEO at one type of company is not necessarily good at another type of company, because there are just as many types of CEOs as there are any other position, and everybody has their strengths.
So, what do you think about the crisis operating system, Katie?
I love it. It's my favorite new marketing term. I'm going to put it in all of my writing. I just read that, and it made me laugh because it sounds like a company trying to create a category that's shock and awe, which is the kind of thing that we've been talking about, gosh, Adrian, like for 15 years. Like, no more fun. Let's try not to scare people into good security. It's like, okay, now we're gonna create a whole company that's whole purpose is to scare you into doing what we think. Gosh, I wish I could understand why people did things, but crisis operating system is, God, yeah, it's not my favorite. I will be using it ironically and sarcastically only.
And the company name
my
is
question,
spelled...
Katie.
Go ahead.
Well, yeah, I'll let you get to that because that's its own thing. I don't even know how to pronounce that. But let me ask you: crisis operating system, or next generation as a term, or better yet, ZT. Which one do we take out and shoot in the head first?
Next gen's pretty bad, but crisis operating system, like I see Tom Cruise in a leading role in that movie. I mean, I see him like jumping out of a plane for his crisis operating system, right? I mean, it's come on, guys, let's stop with the really, really bad, meant to scare you into buying my tool marketing. It just makes us look bad as an industry, and it's not going to make business leaders be like, oh, yes, you can have $7 million more for your operating budget today. Like, it's just not going to work.
Adrian, tell us the name of this company that is the crisis operating system.
Well, it's spelled CYGNVS. So technically it has no vowels. Y is sometimes a vowel, but it's just it's
I want to hear you
too
pronounce
many.
it, man.
It's too many consonants for a non-Polish word. Cygnus.
Cygnus. That's interesting. I would have said Signvins.
I just have to make the V a U. So Cygnus. The founder's previous company was had a very similar name, Science, spelled CYENCE, but pronounced like
interesting.
I'm doing science.
And I do want to point out in your little blurb that you wrote here that this company does have a, quote, cozy relationship with cyber insurance. So it's just piling on the badness for me here. It's just no bueno, my friends.
It's an A16Z and Andreessen Horowitz company, too, which is completely surprising. And then not only that, but if you read the article, there's so many amazing A16Z Andreessen Horowitz caveats at the bottom. This context is provided for informational purposes only. It should not be relied upon as legal, business, investment, or tax advice.
That's a big disclaimer.
Oh, it's huge. 4 paragraphs of disclaimer at the bottom.
Well, is that for, in case they get sued? So they can't cover themselves because they're an insurance company?
The disclaimer is as long as the blog post.
Yeah, so the previous company, Science, is described as a pioneer in cyber insurance underwriting that sold to Guidewire. So yeah, I mean, this is also part of the terrible buzzword and terrible name isn't the only trend here. Also, there's the connection between technical security products and cyber insurance policy writing.
So
I'm not even sure the correct term to use here.
hey, use our product, and then we'll tell you if you're secure enough to be covered by our cyber insurance.
Mm-hmm.
We're going to protect you from an operating crisis with our system.
Since we're talking about he's writing, somebody's a writer. So since we're talking about companies with bad names, can we jump to number 4?
Well, it's French, so I'm not even sure how to pronounce that. Like, I'm not sure how the French would...
I don't know. I just totally made that up.
You wanted to bring it up, Tyler. You pronounce it.
Nope. I refuse. Well, no, I don't. All right. Ajiri?
I like Katie's pronunciation better. Ajiri.
Yeah, I just moved my head a lot. I basically said the same thing Tyler did.
Wave your arms with it. Ajiri.
Yeah. So, kind of I'm surprised I'm not seeing cyber insurance here. Also, because it looks like what they're aiming to do, measuring financial impact of cyber threats, is the kind of thing that a cyber insurance firm would want to use to price a policy.
Okay, so hold on. Before we go, the Collins Dictionary says English translation of égérie. So yeah, they have the accent aigu on the word. And the Latin to English translation is I will do it.
Oh, look at that.
Okay, cool.
So let me give you Marketing 101. If you have to explain the name of your company, don't name it that.
Yeah, but maybe in France they don't have to.
So maybe we're just dumb because we're English speakers.
Exactly.
Yeah, but if you want to try to tackle a global market, don't name it. You're not going to name it an American slang term that Europeans won't remember either.
Right. Yeah, they are aiming to expand in Europe, and I was incorrect. They are developing specific functionality in this product for insurers. So we have yet another funding story here where there's a connection between security and insurance. So that's 3.
I also found a different dictionary with a different translation too, though. So now I'm in a rabbit hole, and it's all your fault.
Yeah. So to complete the trifecta here, we've got we only talked about 2. So Cygnus, Ijori, and story number 9, Guards with a Z, is focused on small business, SMBs, and is also both a cybersecurity and insurance solution bundled together. So, very interesting. The small business, I think, is one place where that could really be used. A lot of people know I keep a list of all the companies who have been destroyed by a security incident, and they're all small businesses. The biggest ones on the list have maybe, I think one had 400 employees, one had 450, but most are smaller than that. So they could use some insurance bundled with security. Some kind of maybe MSSP or MDR security approach, something that fits for a company that size. Something that would allow them to survive, ransomware attack or, maybe a destructive attack. All right. Let's see. Anything else under the funding look interesting to any of you? I do want to mention number 7, Tenable Ventures is now a thing. So Tenable now has a ventures arm, and their first fund is a modest $25 million, but interesting seeing more and more cybersecurity companies create their own funds.
Yeah, this is a typical CVC play, corporate venture capital play. I'm surprised at the size, though. 25 million is so freaking tiny. Unless you're writing basically what you have to do is try to figure you're going to want to do about 10 to 20 deals to return a fund. And unless you're writing checks in the couple 100,000 size, what's the point of a $25 million fund? I guess.
Even if they're doing seed, that's maybe 5 investments, right? Like most of the seed we see these days is 5-6 million at least.
Yeah, I've been involved in a handful of deals with some CVCs, corporate venture capitals before. The interesting thing is they don't have to keep dry powder back. They don't have to keep funds behind. Generally, they'll come in at a round, an A round, a seed round, even a B round, and they'll take a couple $1 million check, and that's it, right? And really, they're not there to return the fund, although that would be nice, right, from an investment vantage point. What they're really buying is the strategic right to watch the company closer and to potentially acquire the company at a later date.
Gotcha. And that's why I'm glad you're here for these, because I'm not familiar with that at all. All right, let's see here. So yeah, standing question. Any other fundings anybody wants to talk about before we move on to trends? All right then. Trends, the Aeron apocalypse, the Herman Miller Aeron. If you need a nice Herman Miller chair, head over to, is it eBay? Where should they go, Tyler?
Oh, you can get them anywhere. You can get them on eBay. You can get them on Reddit. You can get them on Facebook Marketplace. Pretty much if you're in Silicon Valley, you can get them on a street corner. Just go outside and look. You're going to find chairs sitting around. Back in the late 90s when I was in Silicon Valley during the dot-com crash, the Aeron apocalypse of 2001 was so massive that literally there were warehouses full of these chairs and you could pick them up for nothing. You just had to go pick them up, literally grab them. It's interesting because I posted about this after I saw this tweet by Gilad or Gilad Ram, I think is the full Twitter handle. I posted, it reminded me back of the late 90s implosion of the dot-com implosion. And it turns out it's a known thing. People have tracked the usage of Aeron chairs as a potential preceding indicator to technology market collapse, which I find very, very funny, morbid, sad, all at once.
Yeah, and for those who don't know, these this is right off the top of my head, but I think they retail for $1,100 to $1,300. This particular model of Herman Miller chair, and it's kind of like the standard for, fancy startups, stuff like that. And
yeah, literally every high-tech startup on the planet uses these same exact Herman Miller chairs since 1999.
Yeah, and it sounds like they're very ergonomic. They're nice chairs, but it sounds like they're going for about $600, which I think is also an indicator. It seems like price to move very quickly.
Yeah, well, when there's significant supply, they can price them low.
So somebody who doesn't need to sell chairs to make money back on assets, Microsoft is, it feels like just yesterday, they were a $10 billion in security revenue, $10 billion security company. Apparently now they're a $20 billion security company.
What caused the jump? Did you take a peek at what might have caused the jump? Was it acquisitions? Was it investments? Any idea?
No, I did not dig into this one.
Very likely cloud services.
Yeah, I wonder how they're.
Oh, they get so many more now, right? Like they keep doing acquisitions, and they keep introducing more and more security platforms and tools. So yeah, I imagine a lot of it centers around Azure.
Absolutely. And I mean, even with the different subscriptions you get through Azure AD and Office 365, the security components, so a lot of it's based around you pay the base price and you have the ability to potentially report on something. As you pay more, you have the ability for automated remediation, which everyone kind of wants anyway. So you end up in a situation where Microsoft continues to talk to their customers about, hey, you're on, this subscription level, but for this much more, you'd get this capability and these other features and these security capabilities. Microsoft has put a lot of investment into these areas, especially around email filtering and scanning. the endpoint, the EDR systems that are on endpoints, expanding that capability to servers. They changed the way that pricing was around that. So it used to be you could have the Microsoft EDR tool on workstations and servers through a specific type of license bundling, and then they changed that. So then it was you had to get something else in order to cover servers. So there have been some tweaks, and they said before that E5 was going to include everything, or likely include everything. And then at the last Microsoft conference in November, we found out that actually there are a couple things that you'd have to add on separately to the E5, the Microsoft 365 E5, or in some areas it's called A5 or G5. But the licensing gets very complicated, but as with cloud, as you're paying a subscription and you're paying for services, you end up paying for that every year. And a lot of times, what organizations do is they look across what their vendors are. What are the tools that they're using? Are you using McAfee and Symantec for antivirus? Well, if you, for a few dollars more per user or per whatever, could you just bundle in Microsoft Defender for Endpoint? Well, maybe that might make sense versus paying the millions or whatever you're paying to a third-party vendor for that. This kind of bundling and bringing things together. Microsoft has already set themselves up where you're paying them a bunch of money every year with their old enterprise license agreements. Now we're moving into cloud. Now we're moving into situations where we don't own the software and we get updates to that. And the security capabilities continue to improve along those lines. The article itself talks about the fact that should Microsoft be the security vendor for a company that's using Microsoft products when Microsoft patches or fixes or even 0 days are out there cause issues that they then may be fixing through their security tooling?
I see where you're going with that. Yeah, like Rackspace. So what happens in the Rackspace case with their hosted Exchange? Rackspace neglects to install an Exchange patch and gets owned so hard that they migrate every customer to Microsoft and shut down their hosted Exchange product. Only 1% of the revenue, sure, but a bit of irony there, right? Like, a flaw in Exchange causes Microsoft to get, an extra 10,000 small and mid-sized business customers as a result.
And that's not nothing, right?
Yeah. Yeah, and so here in the article, they call out XDR and SIM specifically as contributing to this, but also they call out Azure Active Directory. So Azure AD, it sounds like, is getting counted in this 20 billion. So yeah, I can totally see how you can get to 20 billion if sure, you're including all the IAM stuff.
Yeah, I mean,
but isn't this a fox guarding the hen house? Isn't this a fox guarding the hen house scenario, guys? It also comments in the article that 30% of total vulnerabilities uncovered over the past year for CISA exploited vulnerability list was Microsoft sourced. FBI, NSA, CISA, CIA highlighted the 15 most common vulns and CVEs exploited by hackers. 60% of the 15 were due to cybersecurity deficiencies in Microsoft systems. So are we setting ourselves up for an ethical dilemma? Are we setting ourselves up for a situation where it's like, oh, we have more vulns. Oh, well, we're not going to worry about fixing the vulns because we're going to make more money on the security side anyways. Is it a fox guarding the hen house problem?
Well, I don't know if you get to Microsoft's size without that being an issue, but certainly if you look at Apple, they over the years have built more and more security tools into their products, but they don't charge for any of them. You don't get charged for the built-in AV that Macs have, or the built-in firewall, or any of that stuff. That's just included in the price of an operating system that they also don't charge you for. So yeah, I think it's problematic, and it's there's a lot of rumblings about anti-competitive practices right now with a lot of the big tech companies. And it'll be interesting if having so much security revenue under the same roof as the the business divisions creating the security problems gets specifically called out as we start to see some the U.S. government start some lawsuits and some anti-competitive conversations with them.
Well, counterpoint to what you just said, Adrian,
response
Microsoft
might
Windows
just be, and if I were in their comms, this is how I'd approach it. Like, we don't need to either not pay attention or create new vulnerabilities, or whatever the case may be. It's going to happen anyway. Crime's going to happen. Vulnerabilities are going to happen. Incompatibilities, misconfigurations are going to happen. And so, even though they're sort of working both sides of the coin, they don't necessarily have to be rooting for bad stuff to happen, because it's just going to happen anyway. And that's certainly a valid argument. It's, it does get into a little bit of a, what are they really hoping for here? But I think the reality is that even if Microsoft didn't exist, there would be all of this bad stuff happening anyway. And just one fewer player to potentially solve the problem. But then you get into a whole industry-wide question, like, are we just not creating tools that stop everything because it benefits vendor companies? So you could make that same claim for any vendor company on the planet. It's just that Microsoft has a bigger target on its back because it's Microsoft.
Well, and a counterpoint to Adrian's points about Windows or Mac versus Windows. I mean, Windows has a firewall built in. It's free. It has antivirus that's built in that's free that actually compares pretty well with the third-party tools that are out there that are antivirus, pure antivirus play. What we're looking at here as far as revenue, the bulk of this is cloud revenue, as Adrian mentioned. So if they're including Azure Active Directory, Azure AD subscriptions in this, that's going to be a huge amount, because in order to get additional features like conditional access, which gives you kind of what I call an identity firewall, you control who connects to what, how, when, from where. And it gives you that ability to really control where users are coming from. And that's, for me, that's a core security feature that you should have pretty much any company that has Azure AD and is in the Microsoft 365 environment, because that provides a capability of control, monitoring. They have security defaults as a core baseline configuration, but really conditional access provides additional capabilities. We need Azure AD Premium 1 to do that. So that's a cost per user. There are bundles of subscriptions that include that along with other things. So a lot of this that I think we're seeing based on what the pricing is around, maybe Microsoft has shifted where previously those were captured under a different line item or revenue capture, and now it's falling under security. But yeah, that would account for a lot of it, because they have a lot of people on Azure AD, and from at least the customers that we assess at Trimark and looking at their Azure AD environments, most of them have licenses in order to get conditional access and leverage conditional access to control who can connect to their Microsoft 365 environment.
Yeah, it's definitely not a simple answer, I don't think. I would love to hear from some of the folks listening to the podcast, some of our listeners, and their opinions on this, because it's a tough one. But they're certainly making a lot of money from security. All right, let's move on to see what other trends we have here. It's interesting. Back with all the LastPass stuff, a lot of people have been shopping for other password managers. I've shared the fact that I use 1Password not only for my passwords, but also for my some of my 2FA, some my TOTP codes and stuff like that. And not 100% comfortable with it, but it does seem like having all the eggs in one basket. But then I read this article about somebody on Google Fi getting hacked because somebody wanted to get access to the crypto funds that they had in their Coinbase account, and part of that hacking the SIM card gave them access to Authy, which is what a lot of people I talk to are using to keep their password database and their 2FA separate. So yeah, I guess that's another problem is having all these secure apps linked to a phone number. Like we still have Signals connected to a phone number, WhatsApp. There's a ton of apps where if you get access to somebody's phone number, you can get access to these things.
Yeah, that seems like a very low bar too, especially given the breaches that have been dumps from different organizations and Twitter and others where phone numbers used for MFA were dumped. So that sounds like it's a pretty big problem.
Yeah. Let's see. I thought this was an interesting article, basically talking about a lot of journalists have been analyzing the people getting laid off from some of these big tech companies, and some of them are folks who have been there for decades, and some of them were employed to work on, at least partially, work on open source projects. So now there's a big question, okay, are some of these projects going to get abandoned? What's going to happen to this open source that everybody depends on now that Google is no longer paying the maintainers? So basically, this article is painting that as a potential risk, supply chain risk.
Yeah, I think that's I think that's a big issue with open source, is that the whole concept is that, I'm not saying there's a problem with open source, but if there is a problem that is involved in the model, is it's based on how many people are interested in continuing and maintaining and managing a project. A lot of folks want to set something up as open source and say, hey, this is a project I'm working on, and they get busy with work. I can go back to the situation where there was a major open source project that was being used by hundreds of companies around the world in all sorts of major products. But there was one person that maintained that, and that person was doing so part-time. And the question was, well, if all these other companies are benefiting from this, why aren't they contributing to it, or at least people or money? And it seems like at least some of these companies like Google are starting to have been and continue to, at least until recently potentially, contribute people to help maintain and update these open source tools. Then you look at what happened with Heartbleed, with OpenSSL. There were a couple of others that kind of forked from that, like Libra and some others, in order to help tighten up and keep them more secure. Well, if those are getting managed just by Google or another company, and then they cut it, then all of a sudden you have another open source distro or framework that is involved in major projects around the world and products that then lose support. And then who picks it up from there? It's a big issue.
Yeah. Yeah, and I've seen some efforts around that. There's some funds out there, that aim to raise money and support folks who maintain some of the more critical software packages, but certainly not an unsolved problem by any stretch. Especially complicated by the fact that attackers know that they can go after a lot of companies by going after supply chain, by going after some of these software packages and repositories like NPM, stuff like that. PyPy. Yeah, I think it was one person that's been running PyPy, and I think I heard somebody talking about him being laid off. So the whole Python package just one guy.
It's absolutely amazing to me. It's absolutely amazing to me how the stuff runs on bubblegum and matchsticks and duct tape. Like, so much open source is literally one dude in a garage who says it's awesome and somehow gets the marketing catch and people love it and it takes off, and it still only ever is one guy. I think if we were to translate from a foreign language called open source, or if we were to translate the words open source from an open language into English, it really just translates to one person in a garage. That's literally all open source is.
Yeah.
So what makes some open source projects successful and others not?
It's just the amount of people that end up backing them. It's just that if you look at the long tail of it, the vast majority of projects are just not supported, right? There's just a small selection that matter.
Yeah.
Yeah, InfoWorld has a scathing article on this. They titled Google Blew It with Open Source Layoffs. And they close out the article saying that, yes, Google's parent company Alphabet is scraping by on a mere $46.34 billion in profit last quarter. So, yeah. and they highlight how short-sighted this seems, including one of the folks that had been involved in the open source programs for a long time, over a decade, was one of the folks that was laid off. So yeah, it does seem to not entirely, it doesn't make sense for at least us as outsiders.
Yeah, I mean, it's not a problem until it's a problem, and then it's an emergency, and we'll see what happens in some of those cases. Maybe somebody quits, pulls their stuff from repos, loses access to it, abandons it. Malicious attacker gets access to it. It's there should be some effort to make sure that doesn't happen, at least to like the top 1%, 5%, 10% of the most important packages that the internet and most organizations depend on. But I think we got some speaking of layoffs, we got some late breaking news here. Tyler, you want to cover Siren real quick? Speaking of layoffs, we got some late breaking news here. Tyler, you want to cover Siren real quick?
I'd be happy to, assuming that we're not breaking up and getting echoes. So if I start to echo, please call me off, wave me off, and we'll go. But yeah, I heard yesterday through the grapevine that Siren killed off a big portion of their workforce, and I thought it was maybe a portion that was a layoff. Turns out Siren is liquidating basically the entire company. They fired the whole company as of yesterday, and as of today, they're down to 50 cents a share on the public market. At one point, if you look at the 5-year chart, they were over $70 a share. So talk about a run right to zero. There you have it. Like, it is possible post-IPO to run to zero. As sad as that story is, it's people are jumping ship left and right last week, and now they're dead. The whole company's gone.
Yeah. Not sure what's going on with the echo there, but I was able to make out most of that. You said I didn't even realize they were a public company. But yeah, I think this is the first case we've seen with a cybersecurity company just folding altogether. So that's it's foreboding. All right, and the other one that you brought up here was looks like Rapid7 is exploring a potential sale. Assume that would potentially be a take private by maybe a PE firm, something like that. I don't think considers approaches from parties that include private equity firms, sources said. So they're working with Goldman Sachs on that. Interesting stuff. We also have a story here about Mudge finding it was unclear to me if it was a full-time position or, the article that I had said that it wasn't a full-time position. So some connection to Rapid7, but a lot of interesting stuff going on here. All linked to the market downturn, it seems like. Is everything sounding okay? How's audio doing?
Sound great.
Okay.
I think Tyler's just had too much bourbon today.
Tyler, you're supposed to drink the bourbon, not pour it in the computer.
And as we're moving on to the next story, we have a public service announcement from one of our sometimes co-hosts, Tyler Robinson. He asked us to please announce, this is just a little PSA, that there is an organization, the Ukraine Humanitarian Aid Village. Tyler does some pro bono work with them, and it provides housing for displaced women and children. And they had funding fall through this week, and the founder is covering costs to keep them alive until the end of the week. But they have to move to hallways and less safe places. So if you go to donorbox.org and look for Ukraine Humanitarian Aid Village, if you want to help support them, please do.
let's say keep them running, not keep them alive. That's a little too real.
Oh, I'm sorry. That was a terrible Freudian slip. I'm sorry. Yeah. Well, please help.
Yeah. So I posted that in the Discord, so you can find that in our Discord there, and I'll see if I can get that added to the show notes once we're done here. Let's see, a few more things I'll cover real quick, and then we'll wrap with the squirrel story here. Let's see, where was it? So how well did Israel's cybersecurity industry do in 2022? It did pretty freaking good, and we've seen startups coming out of Israel accelerating. So that market is, in spite of everything else that we're seeing, layoffs and things like that, only seems to be accelerating out of Israel. So it's interesting to see some parts of the market, running into some hiccups while others seem fairly healthy. I enjoyed the FBI says it hacked the hackers to shut down major ransomware group title there. It's that
was a great article.
Yeah, it's great. It's certainly going to be making some of the bad actors nervous, right? Like, I think the FBI was in there for, I forget how long they said, but it was a significant amount of time that they were in there.
Yeah. I don't see this as that much different than when the FBI discovers a warehouse where there's counterfeit equipment or whatever, things that are obviously actively being used as part of a crime. They go in, they take it over. That's effectively what they did. They went into the systems that were handled and used by the ransomware group in order to manage their operations. They were able to pull out and extract the encryption keys, the decryption keys, and give those to the victims. I believe they noted that they estimate they saved over $130 million for victims, and that doesn't even include those that probably would have been victims in the future had they not done that disruption. So yeah, very interesting article.
Yeah, positive trend, I would say. My next one, love it. Appliance makers are sad that 50% of customers won't connect their smart appliances. Maybe
what a surprise.
Maybe you shouldn't be sticking a internet connected computer into everything.
What a surprise.
Constantly hear people bemoaning the fact that they're having trouble finding a refrigerator that's not internet connected or a washer and dryer. Like, it's just the value just isn't there. Like a lot of those appliances were just fine without all that stuff shoved in them. That's going to break, and is going to break a month after the warranty goes out, right? Like, nobody wants to worry about that.
Point. That's the whole point. Appliances used to be built to last, and they used these as slogans. It was part of their marketing communications. And now they're not. Appliances are built to be trendy. Everything from the features and the functionality to the longevity of them. The features, functionality, which is tied to the longevity of them, as well as the look. Like, who knew, if you look back 20 years ago, that what material was on the outside of your refrigerator mattered? It was trendy. Like, people just had refrigerators, and now looks come in and out of style, and it's, these are not meant to last. And I had a conversation with an appliance repair person on July 4th, about 12 years ago. He came to my house because my fridge died on July 4th, of course, on a holiday weekend. And he said, geez, you're lucky if you get 10 to 12 years out of an appliance these days. So you're just adding more things that can break. But the appliance companies, it sort of gets back to that Microsoft question a little bit, right? Appliance makers benefit when people buy more appliances. And in theory, people are just going to, there's always going to be this ongoing need because things will naturally break and die down. But if they make sure that they're not built to last, then you have to buy, instead of buying a fridge every 10 years or every 20 years, you have to buy it every 10 years. Instead of buying a washing machine every 20 years, you have to buy it every 10 years. It just makes the market more profitable for them. And so they don't care. They don't care if people aren't using them, and they don't care if it degrades the quality of the appliance because they just want people to buy them. And no, you don't need
when they start attaching subscriptions to them is when the pitchforks are really coming out. Like BMW talking about a subscription to use the heated seats, where all the functionality is in there for it, but you have to pay a subscription to unlock it. And you start doing that to appliances, that's people aren't having that. But more and more, I think it's going to be important. Right to repair and the work that iFixit does, I think it's becoming more and more important as these products get tougher and tougher to keep running.
Yeah, you mentioned BMW and heated seats. I believe that's an extension of what Tesla's been doing, where they just build the cars with all the features and capabilities in it, and then they have an over-the-air update, which then unlocks that capability if you've paid for it, if you pay for that extra. So I can definitely see the benefit in that sort of scenario where if you buy the car because and you're like, I don't want to pay for heated seats in the car, but then later on, you end up moving to a location in the Northeast that's pretty cold, and then you want to have heated seats, so it's like a $3,000 option that gets enabled through an over-the-air update. Okay, that seems kind of reasonable because you might not have wanted it then, now you do. The thing where it gets really tricky is I've read about Tesla, and I don't know if this is true, but someone had bought the car, activated these features through the this over-the-air update or some sort of subscription that gets activated on the car. When they sell the car, then in this example, the heated seats are not transferable. It's the original owner, which seems to be like an extension of what Hyundai does, where they say it's a 10-year warranty and it covers the drivetrain and everything else. But the fine print says that's only for the original owner. If you are the second owner or the third owner or subsequent owner of the Hyundai, you get a 5-year warranty, which is significantly less than that.
Well, the Tesla thing is even more crappy because isn't it like a $8,000 payment for the self-driving stuff, and then the next owner has to pay that same amount? That same lump sum. It's
that doesn't seem right. It should be tied to the car because that's an investment, quote unquote, into the car. Not that cars are ever really an investment if you're going to be driving them to and from work or wherever you're going in them. But getting back to appliances, I mean, it is a slippery slope, but I think that part of the problem is manufacturers of these appliances put out these Wi-Fi capable appliances and apps, but there's no real benefit to the consumer. I mean, I can set a timer on my watch instead of using the app to identify when my laundry's done. That doesn't really help that much. It shows on the laundry thing it's going to take 45 minutes or 50 minutes. I say an hour and 15 minutes. When I show up, it's done. Like, I'm not losing any time in my day dealing with that. Sure, it might be nice to have a notification that my refrigerator's water filter is getting to the point where it needs to be replaced, but the refrigerator says that already on the front of it. So there's no real benefit to the consumer other than the manufacturer apparently getting anonymized data or more based on what the article's saying. It doesn't make sense. And it goes back to Katie's point where these things have become more of a commodity where they're not going to last. We're in a situation where most things don't last like they used to. It's just the reality of it. Cheaper parts, cheaper products, from clothes to appliances to just about anything. And if it lasts 10 years, then you're in good shape. I've been through several dishwashers in recent years and a couple different refrigerators. And it definitely is a situation where they don't last as long as they used to. And if the manufacturers are pushing something like this, where they are looking for this as a way to add to the bottom line, consumers aren't going to go for it, especially when there's data being transferred across. I mean, I'm tempted to get a bunch of Wi-Fi enabled appliances and just start opening and closing doors and setting things randomly to throw that off. But again, if it's anonymized, it's one person out of thousands, maybe. We'll see.
I mean, I think a lot of people are buying these appliances because that's what there is. My mother-in-law to be bought a Wi-Fi enabled fridge for her kitchen. She got her kitchen redone, and she wanted to buy a fridge that matched the aesthetic. And so we went over there after the kitchen was done, and I said, "Oh, have you tried out any of the features?" Because my fridge is old, and I was curious how they worked. And she said, "Oh no, I'm never going to use those." And I said, "So why'd you spend the money on a Wi-Fi enabled fridge?" And she said, "Because it was the only one that matched the design of the kitchen."
The aesthetics, yeah.
So, I mean, you're paying extra because that's what's available. But if you've got somebody who, those of us that are on this podcast and probably most of the people listening are maybe a little more interested in some of that technology, either using it or exploiting it or seeing what it can or can't do. But for the average person, they might be like, well, I just want a fridge that looks good in my brand new kitchen, and this one is it. I don't give a crap what it tells me, so I'm never going to turn it on. I don't need to be alerted when my milk gets low or whatever the hell it is, right? She's never going to use these things, so of course she's not going to turn it on. And I think the more ubiquitous these types of appliances get, the manufacturers are going to be kind of stumped. Either that or they're just going to take the money and not care. So, I think you're right in your show notes, Adrian, that, we're going to see those numbers rise.
Yeah, I hope so. Yeah, and one of the frustrating things is I've got an 11-year-old BMW, and it had all these connectivity features, like an SOS feature, where if you broke down or something like that, it's got a fancy button with like a little cover. You push the cover, it flips down, and there's like a fancy switch in there. And all that was, all those services were shut down like 6 years after my car was sold. None of that works anymore. None of the connectivity stuff, they just shut that stuff down. So, like, even if you are using some of these features, how long are you going to have them for? Or are they even going to, the software feature is going to last the life of the mechanical life of the thing? And to Sean, to your point about quality, security is also, security issues are also something that will emerge with bad quality, with things that are rushed to market and rushed out. I think we'll see security issues go right along with that.
Absolutely. And there's definitely a trust issue here. So once you connect a device, that you don't feel like you need to connect to the internet. So most people don't feel like they need to connect their toaster to the internet in order to use the toaster or get some additional benefit out of it, which I would agree with.
I want the best toast, Sean. I want the best toast.
Yeah, sure, you can dial in the exact level of burntness you want on your toast, and then you can have a great, perfectly burnt piece of toast for your breakfast, which is great. I bought a TV recently, and it's a smart TV. There's no way I'm connecting it to my Wi-Fi ever, because I don't trust the manufacturer of this TV to not do other things with that information, with that connectivity. I'll just plug in my Roku like I always do, and then I have the opportunity to move that Roku around the house. Did I pay extra for a smart TV versus a regular one? I guess I did, but I bought the TV that I wanted, that had the features and the specs and everything else that I wanted for that specific device. And I think consumers are going to continue to do that. The challenge is that if the manufacturers are able to compel or explain in some sort of benefit to the consumer that this is going to help the consumer out, and they're not just getting this data. The thing that scares me is when TVs have a built-in video camera and audio device where it can listen to what's going on in the room and it can see people. There's a slippery slope there, and that's not one I want to participate in.
Yeah, I'm looking forward to the renaissance here, where we see some cottage industry of appliance makers that pop up to make non-smart stuff, to make like old school high quality stuff. Like, if this trend continues, where people are not using these features, there's going to be a market for those products. And you know what? People will pay like the same money, if not a little bit more money, to not have the extra features in some of these products. That's my prediction.
I would pay more money
I don't need to talk to my
surveillance. Yeah.
I don't need to talk to my TV to say volume up or down. I'm okay with that.
All right, that wasn't.
I've got friends here with me apparently. Hi.
Yeah, you do. It wasn't my intent for that to be the squirrel story, but it very much is that's a better squirrel story than the squirrel story I actually had in here. If you want to see the squirrel story I actually had in here and see other stuff like nostalgia, remembering Sequel Slammer, go to securityweekly.com/ESW304, and you can check out the stuff we didn't have time to cover today. But I think it's a great rant to end on, because it's one where I feel like we're all definitely on the same page with not wanting internet connected fridges and toasters. So Thank you,
and we
Tyler,
did mention
Katie.
Jurassic Park. We did mention Jurassic Park, which directly ties into your squirrel story. So that'll have people go and say, "What was the squirrel story?" and go and read that.
Absolutely, yeah. It's a very Jurassic Park squirrel story. Absolutely, the spirit of John Hammond is alive in our squirrel story today,
and in all of us.
And in all of us. I don't know. These smart appliance makers, thought so hard about what they could do, they didn't stop and think about whether they should.
Very true.
To quote Ian Malcolm, or paraphrase him. Thanks so much, Katie and Sean, for joining me today. I don't know if I can even thank Tyler. Poor Tyler's been having laptop issues, internet issues. His technology hates him right now.
He doesn't even have to worry about smart devices because he can't connect to anything.
Yep.
Yeah, you don't have to worry about IoT if you can't even Wi-Fi. So you're good.
There you go.
Yeah,
and a big thanks. Oh, he's there. There he is.
It's Grumpy Tyler Face.
Oh man, I'm sorry, Tyler. Better luck next week.
I'm only partially here. Next week I'll hopefully be back.
All right.
On that
note, big thanks to everyone watching or listening to this week's episode of Enterprise Security Weekly. Thanks for having patience with Tyler and his robo voice. We'll be back next week. See you then.